What's good, everybody? Welcome back to another video. In today's video, I want to break down my trading session. This isn't going to be just a trade breakdown. I took a couple of trades, so I want to walk you through those trades so you can understand why I took them and my mindset when things didn't work out in my favor. Let's get into it. So you can see on my charts right now that we have the NASDAQ. You can see I've taken a couple of trades. This is a live market. This was a great trade. So first thing I'm gonna do is I'm gonna break down the higher time frame narrative because that's the first thing I'm looking for with this model, the Champagne model. And I call this model the Champagne model because it's my personal model that I've developed over years of trading retail concepts, ICT concepts, and it's the highest probability models that have worked out for me in my career combined together. So let's go to the higher time frame so you guys can see exactly what I mean. All right, so here we are on a higher time frame. We're on a 4-hour chart, and you can see, if you're just looking at the NASDAQ, you can see that price had this market maker buy model, right? There's a sell side of curve, there's a buy side of curve. Price basically just came down into this key level, which is a 4-hour order block right here. And then it started to disrespect bearish PD arrays, right? Bearish fair value gaps. We got price going from low to high, back to equilibrium, and then distributing higher, and then also doing the same thing right here. Here's a 4-hour order block right there. Here's price going from low to high, and then back to the halfway point to distribute. So you can kind of see the pattern that the NASDAQ is having. It's literally just staircasing up. Watch. Pull back up, pull back up, pull back up. And this is the all-time high. This is my drawn liquidity. I called this out to my team on Sunday in class. It's now Tuesday. So my class, if you're in my group, you're already prepared for these levels way ahead of time. And all you have to do is just show up and execute. So yeah, you can see the clear market maker buy model, which means I'm going to be taking longs. If I take shorts, they're counter trend. We also have one of the most important the most important aspect of the Champagne model is going to be the daily or the 4-hour candle. This right now is a 4-hour candle, but the daily candle, it was bullish too. It's important because if you're in line with the daily candle or the 4-hour candle after 10 a.m., their power of threes distribution, you're going to get a lot of momentum behind your trade. So let me explain to you what I mean. So we're going to go to the 15-minute chart so we can see the intraday price action. All right, so here we are on the 15-minute chart, and you can see that there are many market maker buy models within that higher time frame market maker model. So price is fractal. What you see on a higher time frame, you'll see on a lower time frame, and vice versa. So what do we got on the 15-minute chart? So I called this out early this morning to my group, obviously before the session started. This is the London session, this is New York session, and this is the New York PM session. I told them to watch out for this SMT because obviously we're in this market maker buy model. I figured that this area would play a little bit of defense, and when we get into the lower time frames, you'll see exactly what I mean. So we had at 8:30, we had CPI, which made this huge candle right here. It just basically ran right up, and I told my team if it hits all-time high before the open, I'm not trading. So it did exactly what I expected it to do. It left relative equal highs. So you can see a high there and a high here. And whenever price does that, it's manipulated. It's probably going to come back to get it later. Again, this is a game of probability. So that's what I prepared my team for. Once price ran up this high and it took this high, which is yesterday's AM session high, price started to retrace back into the zone. Now, this big candle that was made at CPI is a breakaway gap because it has several swing highs in it. So I didn't expect it to get filled, but also I know on CPI days, PPI, any major red folder news, I know that if price makes a move like this, it usually gets recovered. So that's exactly what happened. If you look, this 8:30 candle right here, it opened up, it went higher, and then it got recovered. So at that point, I'm looking to either go down here to the lows or I'm looking for the retracement back up. So let's go into the 1-minute chart so you can see my actual execution and how I was able to navigate this price action. All right, so here we are on the 1-minute chart, and this is where I do my best work. This is where the details matter the most because if you can't read price action, then some of these moves will fake you out. I remember in my earlier years of trading, when I didn't know how to read price action as well as I do now, I would just get stop hunted multiple times. I would get emotional when things don't work out. Now that I'm a seasoned vet on these charts, I'm prepared for all of that. Expectations are everything when it comes to trading. If you have high hopes for every single trade, when things don't work out, they're going to make you crash out. It's going to make you very emotional. So you need to work on that on and off the charts. You need to know exactly what's making you greedy, what's giving you FOMO, what makes you spiral out when things don't work in your favor. So that way you can put a plan in place to protect yourself from yourself. If you have a plan that helps you manage your expectations or that helps you adjust when things don't work out in your favor, you'll be golden. All right, so let's look at this 1 minute chart. When price went up at the open, this is the 9:30 open, I tried to go long off that candle. Now, I'll admit, sometimes I'm a little bit risky and I probably should not have done that. I should have been a little bit more patient, but at the end of the day, it looked good. You see, I wasn't even trying to go for all-time high. I was just trying to go for this swing high right there. Price got halfway to it and decided that it wanted to leave relative equal highs. And when price does that, I know to protect my capital. So you can see right here, let's zoom in a little bit. You can see right here, when price made this one candle pullback to my order block, I gave it a couple seconds. I'm not gonna lie, because I've seen price do this before and keep going. You see it try to, but once it wasn't really inverting this first presented fair value gap, which is this one right here, I closed the trade at break even. And then, yeah, I just had to wait. I already knew it was a chance it could be like that because I went early. I usually enter at the macro using the champagne model, but sometimes I'll take a risk. No risk, no reward. So I took a break even there, and then I just chilled out for a second. This big level right here is that 15-minute breakaway gap. So I was watching the halfway point of that. It's also overlapped with the 4-hour gap. So I was watching the halfway point of that, and once we started to displace below it, and this became a breaker, I was like, okay, let me try to go short just to these lows right here, right? I didn't want to be too greedy. Again, I couldn't really tell what the market was trying to do. Didn't even know if it wanted to go for all-time highs today. So I'm just trying to pick my spots and not do too much, right? I don't want to let greed control my decision making. So I waited. If I would have probably entered here, then I would have gotten a better trade, but I needed more confirmation since we did have structure to go long, and that daily and 4-hour candle at this moment was bullish because you see this red dotted line, that is the 12 a.m. open. So every trade I took, like you see these trades here, this was above the 12 a.m. open. So we were bullish at the time. I was in line with the daily candle and the 4-hour. But apparently, I think Donald Trump had a speech this morning and it literally just tanked price to a key level, gave us SMT right there. So I got out because on ES and YM, these lows got ran. So if I would have taken the same short on those pairs, I would have won. But I chose the NASDAQ and, I got to live with the results. So price respected its order block. I got in and, it fell short. Just like this one fell short up here. This fell short. So I wasn't really tripping. I cut the trade right here. You can see right there. So I took a small loss, very small loss. And then I told my team, like, I'll get back in short if it holds. But if it doesn't hold, I'll be looking to go back to my original target. And that's exactly what happened. Price made a smart money reversal down here. This blue line is a 4-hour order block. We had SMT. And then once price started to go back above this red line, I knew the daily candle was flipping back bullish. So I was just waiting on things on the left side of the curve, which is the bearish side of the curve. I was waiting on that to get disrespected, and I was waiting on things on the right side of the curve, which is the bullish side of the curve, to hold and be respected. So I saw this fair value gap here. I also saw this order block right here, and you can see my entry is right there. Look at the precision. The entry is right there. We have this first presented fair value gap right here. So you can see price action just chopped inside of it. This was a tough hold. I'm not going to lie. You can actually see it on my Instagram story and my highlights. This is a very tough hold. But when you are a pro at reading price action, you're not really tripping. I trust my model. And I'm not going to lie, today made me work for it. But I trust in my system because I know over a longer period of time, the champagne model is going to produce results. It's been producing results day by day. So I'm going to stick with it. So yeah, this was the order block right here. I got in. I was watching this IFEG right here. I was also watching the halfway point of this 15-minute gap, the green one. And then once that got inverted and this came back to retest it, I felt a little bit better. And we have an order block right here. This down close candle. Look at that right there. Boom. Look at the halfway point of it. That's mean threshold being respected right there. We also had bullish SMT again. We had a bunch of bullish SMT, to be honest. And then we also have an order block right here. These two down closed candles, boom, drag it across. You can see the trampoline effect. You can see price respecting the order blocks. In hindsight, this was beautiful, but it was a very tough hold. I'm not even gonna lie to y'all. And then I took profit right here at this order block, because if we go from high to low, that's the halfway point. This is an order block that's in premium. So I took a partial right there, and then I held to the bodies of these candles. And then all-time high was here. But honestly, after sitting in this for over an hour, I wasn't trying to hold it to all-time high because it was already a little slow. And when price is slow, as you see, it'll hit these PD arrays in reverse. So I was on the lookout for that. This was a good day. My team ate this with me as well. It was just a tough hold at first, but you can see the low resistance liquidity here being engineered, some manipulation right there. And then, you know, you can see the market maker buy model. You can see the smart money reverse. And this is obviously my favorite model to trade, a market maker model. And then when you combine everything that's in the Champagne model with this, it really just puts it on steroids. So if you're looking to learn how I trade market maker models and you want to know more about the Champagne model, or if you just want to trade with a community of snipers, make sure you click that link in the description, join the group, and I'm gonna get you right. Not gonna lie, as long as you meet me halfway on effort, I'm gonna take you there. So this was a great trade, and yeah, I'm gonna keep executing the same trades all year. Everything lined up perfectly. We're at all-time highs now, and you can see once price got to the all-time highs, it really consolidated a lot. And that's what you want to see. You want to see price get to targets and then start accumulating, because after the accumulation, you get expansion. So that's all I got for this video. I hope you guys were able to find some value inside of this trade breakdown and just see my mindset, how it was working. And until the next one, out.